Everyone knows what the stock market is, but do you know what the stock market actually is? That is what we're going to be covering in today's video. This is day 9 of 100 Days of Finance, where the entire goal is to give you more personal finance education in 100 days than most people receive in their entire lifetime. As always, my name is Derek and I got my degree in finance, so you don't have to. A little casual Thursdays today because I got a boo-boo, had to get a tetanus booster. Anyways, let's get right into the video. So first and foremost, history lesson. The stock market actually dates back all the way to the 17th century. One of the first stock markets was established in Amsterdam in the 1600s, where the Dutch East India Company offered shares of ownership for sale. This allowed for investors to share in the company's profits and paved the way for what we know today as the modern stock market. Now, fast forward about 100 years to the United States. The New York Stock Exchange, or the NYSE, was established in 1792, with it being ratified in 1817, and it quickly became a hub for trading stocks. Over time, the stock market grew and evolved with the introduction of electronic trading in the 1970s and the rise of online trading in the 1990s. Thank you, 1990s, for paving the way for Robinhood, the best, worst trading platform ever created. Now, fast forward to today. The stock market, as we know it, is basically a giant global marketplace, kind of like Amazon. But instead of selling 10 different shares that all look the same from different brands, it's a marketplace where companies can sell shares of ownership to the public. When a company goes public, it offers shares of ownership to investors who can buy and sell those shares in the stock market. Investors can buy and sell those shares with the hopes that the company does well, so the value of their shares increase. Now, the stock market has often also been used as an indicator for the overall health of the economy, which is honestly a stupid idea. Stocks are bought and sold by people like you, me, and your mom, and emotions a lot of the time outweighs logic. So while the stock market being up can be a good sign that investors are optimistic about the economy, take it with a grain of salt and understand that GDP growth, unemployment rates, wage increases, and the overall satisfaction with life that people have are better indicators of the health of the US economy, or any economy for that matter. Now, there are several stock exchanges around the world, with the New York Stock Exchange and the NASDAQ being the most well-known in the United States. Stock exchanges, in a sense, make up the stock market. These are places that basically house a company's stock. It's where the ticker symbol will live, and exchanges allow people to buy and sell those stocks. Now, companies listed on these exchanges must meet certain requirements, such as having a certain amount of shares outstanding and disclosing financial information, and of course, meeting the minimum market capitalization thresholds. Now, the stock market is not just important for investors and companies, but also for the economy. When companies raise money through the sale of stocks, they can use that money to invest in their business, expand operations, and fund research and development. This creates jobs and helps the economy grow. Now, how do people actually access the stock market? They do so through brokers like Robinhood, E-Trade, Merrill Lynch, which I don't even think is called that anymore, etc. These companies act as an intermediary for you or I or your mom to buy and sell stock. So really, when we think of the stock market, we need to start seeing it more as a conglomerate of things, not a single thing. The stock market is made up of stocks that companies create, which represent ownership, stock exchanges, which I guess would be the closest single thing to the stock market, which again house a stock and make it easily accessible to buy and sell it. Brokers, which act as an intermediary for investors to be able to access those exchanges. And investors like you or I who actually purchase the stock and hold them. But you could also include things like market makers, dividends, mutual funds, ETFs, trading firms, and banks. While some of these might not be quote unquote essential for the stock market to function, they all serve a purpose in making up what we know as the stock market. So while most of us usually see the market as a singular thing, it is not. It is an amalgamation. How about that for a big word? It is an amalgamation of multiple things that make up what we know and love as the stock market. Now, in tomorrow's video, we are going to be discussing what an IPO is and how to go about trading them as we continue our journey of 100 days of finance. So make sure to subscribe and turn the bell notification on so you don't miss the next video. I hope this video was easy to watch, informative, and enlightening. Again, my name is Derek and I got my degree in finance, so you don't have to. I love this stuff. It's been my passion for over a decade, and I love to be able to share that with you. I'll see you in tomorrow's video.